All right, I'm going to make sure the microphone is working this time. It's always the internal microphone. I used to have another microphone, but it was Bluetooth and it kept turning off because I never charged it. Either way, good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, March 8th, 2023. Here on the YouTube channel, thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. Bottom right hand corner of your screen, there's a little black logo. That's our logo. Click on that. Turn on notifications, subscribe to our channel, and make sure to like these videos. We appreciate it as always. Let's go ahead and get started. Dow futures up about 19 points, relatively flat. NASDAQ flat. S&P flat. Russell 2000 is up a little more, up 0.23% at 1884. My assumption is that that's a lot of Occidental Petroleum, and Warren Buffett bought more shares, so that's probably bringing up the Russell 2000. Usually when you get kind of a lot of energy companies, regional banks that are up, that's usually going to help the Russell. Back in 2020 and 2021 with the meme stock craze, GME was the biggest part of the Russell, and you could see that was fluctuating that. But that's where we are in terms of that today. Not a GME thing, more of an Oxy thing here. Crude oil is down 1.31% this morning, 76.55 per barrel, $2.66 for gasoline futures per gallon. Gold futures are down 0.08%, pretty flat, 18.18. Silver futures, $20.18. Copper futures up 1%. Remember that copper correlation with the S&P? When copper is usually higher, the S&P is usually higher. $4.01. Euro dollar is flat, 105.47. Again, that's pretty correlated with the stock market too. Dollar yen is down about 19 pips, 136.97. Pound dollar is flat, at least from what I got here. 22,010, down 0.27% for Bitcoin future contracts, Ethereum 1553, up 0.23%. 10-year Treasury yields are down 3.934, even with Powell's talk of yesterday, even with possible rate projection. Will be in a couple weeks, the rate decision, and the projection now, Citibank is basically saying 50 basis points. I still say 25. That's just my call. I think the Fed likes to talk up a big game, but when it comes to foot to the fire, they usually go pretty conservative. How I know that? Because they did the same in December. December, they could have gone a full 75 basis point hike, even without a meeting in January, but they decided to do a 50. Now, has the inflation data relatively changed since then? Not really. Has the labor market strengthened? Yes, we'll see the non-farm payroll on Friday. We'll go over the headlines here in a second. The dollar is flat this morning, 105.59. If you could see here on this chart here, a couple things regarding the dollar. Dollar is looking to be setting up an inverse head and shoulders, as you can see. So again, it could be a little more weakness for equities as the dollar is inversely correlated to the S&P. If we get this break above, let's just say 105.85, which is about the peak high that we just had. Remember, the 100-day moving average could be acting as resistance here. If that's the case, what's the next target? 106.48 will be your 200-day moving average. I'd slide that a little higher to around 107.07. So if we do get that break, if we do reject that 100-day moving average, equities will bounce, obviously, because of that inverse correlation. But 105 right here would be that support level, and that'll get us the levels not seen since, well, the 3rd of March. So, of course, take everything relative. Volatility index still below 20, 1981. Even with yesterday, Powell speaking in front of the Senate, the VIX was relatively muted, and then we continued to fall as we had a very ugly daily candle. The market was down, I think, on the Dow about as much as 555 points. I may get that wrong, but looking at yields this morning, it could be the market is a little muted. Obviously, Powell will be speaking in front of the House Banking Committee. That's at 10 a.m. So we'll see if he changes, not saying he changes tune, but more of just reiterating the same thing. Maybe the market's already pricing it in. As we can see, the QQQ right now, I have an alert at 296.86 here on QQQ. And in terms of what I'm looking for, a couple of things. We could get a little lower on Qs. Again, I'm not against shorting at all. I didn't short yesterday. And again, the only reason I didn't is because we haven't broken anything meaningful as of yet. So again, I do have a gap to fill here right around 294.50 on Qs. If we did not have that gap, I would want to be going long ahead above 296.86. The only issue that's kind of holding me back here is that Tesla had some headlines regarding a steering wheel issue and some recalls. And it was also downgraded to hold. So again, Tesla is a big part of QQQ. That might be adding a little pressure to Qs itself. But again, 296.86, if that does break, I'd be taking a look at possibly the 300 calls. But the only issue is that you also have NFP on Friday. So again, you're kind of walking on eggshells here, not trying to add too much risk at all at this point. If you were watching yesterday, and if you remember, we had that AMD chart on Monday. AMD did the same thing yesterday. We got as high as around 84 on those 85 calls, got as high as 71%. I don't think anyone left a runner because the runner went red anyways. The day before, I think it was on Monday. So again, if you didn't get a chance to get out on Monday, maybe due to PDT or you just missed it, you had a second chance at AMD. So again, well done as of right now in terms of AMD. In terms of Netflix, I mean, just pretty much choppiness. Holding this one here, ugly. We are holding the 100-day moving average. Again, I want to see where the market goes today with Powell. Maybe we start doing some retesting. Maybe we bounce. But again, those premiums are pretty much nuke. I want to be as forward as possible. Sometimes you just get mowed down on a trade. Let's see what we can do. Maybe we can salvage some premium. Maybe we find another opportunity to make up for it. Again, you just got to keep shooting, trying to find the best setup for high probability setups. Excuse me. So again, losses do happen. I don't think it's a loss as of yet, but again, I'm gonna go and wait on it. And that would suck because it'd be the first one of the month, and that's not my favorite thing. Again, I'm very competitive. I want to win everything. In terms of S&P 500 futures, let's go ahead and go to the 4-hour chart to give us a little more color here. And really, the level I was looking for in terms of the market was to retest the actual breakout that we had last Friday, and we didn't get there. I was right around 39.70. We bounced right around 39.80. I was kind of debating myself to want to go long yesterday as maybe a reflex rally into today. We decided that the best bet was to just wait and see what happens with Powell today. So again, not exactly a revenge setup, but in terms of I just want to play the turnarounds. But again, let's see what we get in terms of the market. If we do bounce, I remember talking yesterday, 4,100 is our resistance. That's where I would want to go ahead and start taking some profits or start taking some trades to the downside, maybe some puts. But taking a look at this just in general context, we talked about this 40-60 level. And again, that 40-60 level seems to be resistance right now. Again, that was previous support from mid-February. So again, could we retest those 40-60 levels? Would we go ahead and short again? Could we retest this breakout point? Now what we're looking for is if Powell starts speaking and we start breaking below this retest of 39.74. I'm going to go and place an alert there. If that does happen, I definitely want to start taking a look at some possible put options down to retest here that trend line that we got to right around 39.30, 39.35. Again, that'll get us a little bit of room, maybe about 45 handles. We could play some tech for some weakness if yields start rising, if the dollar continues and breaks out above the 100. So again, you're kind of in a really mid spot, very choppy area. And again, the one thing that I sent out on Instagram and Twitter, which is pretty funny, is the fact that, guys, if you went ahead and bought stocks in May, right here, right around May, where are we at? Let's see here, let's call it May 5th. I think it was May 9th, excuse me. If you bought stocks on May 9th, you bought SPY on May 9th, and in your brokerage account, and you forgot your password, you never checked on it or anything, you're back to the same level you were then. You're break even, not counting dividends. So again, it's just, if you look at this, it is just one big range. So not an investable market as of yet, unless you're dollar cost averaging, fine. But in terms of trading, this is a trader's market. You can catch ups and downs as you go. Just keep the risk in check. But in terms of investing, there's really nothing to do here. Nothing really exciting out there. You're just chopping in range. And that's okay. But again, I wouldn't risk capital on buying stocks at this level unless we start breaking down a little bit and we get a lower price, sure, or we confirm the breakout above 4220 on S&P. So that's kind of where I'm looking at in terms of the market right now. It is a trader's market. Again, just finding opportunities as we go, up or down, puts or calls. But as of this moment today, there's not really much edge. I mean, you could test that 39.75 breakout from the Friday breakout, excuse me. We could break above 4,000, possibly to 40.13, and see if we can get a little higher. Maybe we break that 20. But what is Powell going to say today that's really changed from yesterday? I mean, I don't expect much, to be honest. But there was a question. Let's go ahead and answer it. Zoom Balloon says, good morning. Good morning. Zoom Balloon. Wolf is asking, good morning, Carlos. What can we expect from Powell today? I really expect not much, to be completely honest. We may have just priced in a 50 basis point hike in a couple of weeks. We do have the jobs number coming out this week. And again, that's labor pressures, inflationary pressures. And we talked about yesterday, like really what's the Fed's mandate? They always say two things. It's price stability and maximum employment. But what if maximum employment is hurting price stability? What if price stability is hurting employment? I didn't get that sentiment from Powell that he really doesn't have a wherewithal to say, no, price stability is paramount above maximum employment. A couple of senators from both sides of the aisle were saying that, based on past data, the more they tighten, you're tightening into a recession. And I think from what I saw, Fed Chair Powell kind of dodged the question on that sense. I mean, what can he say? He really can't go in front of Congress and say, yes, we are tightening into a recession. They can't say that. So remember, he's kind of tied behind his back in terms of what he can say. But again, as a trader in me, what I do see, what I have noticed is that the Fed is almost trying to convince me that they're going to take action like they haven't already. 425 basis points later, we're the exact same place as in May. In May, we raised rates. So again, after all the commentary from Bostic and all these Fed governors and Fed chairs, all of them, really just saying the same thing. We're going to keep tightening. We're going to keep tightening. We're going to keep tightening. Yet what we've noticed is nothing really since May. Nothing has changed. Again, if you bought you bought SPY in May and you just held on until today, you're break even. So really, what is the Fed trying to say? Well, in my opinion, I think what the Fed's trying to do is talk down the market, let the market do the heavy lifting while just reiterating the same thing. I'd rather see what they do rather than hear what they say. If they do a 50 basis point hike in March, okay, we can go ahead and adjust our analysis then. But what if they do a 25? Kind of setting up for a short squeeze, am I right? Who knows? But there's one thing that I can say about the Fed, at least from what I've been tracking, been doing this for 8 years, is that, again, they're behind with regards to data, lag data. And again, they are beholden to politicians too. So it's kind of like not as simple as just macroeconomics and doing the right thing. There's also political pressure, unfortunately. And so it's very tough to kind of take what they say for face value. The market prices and everything, like I said, market is never wrong. So again, we're going to use price action and where we are as really the hint of what the Fed is doing. We know that 2-year yields are not at its highest place since 2007, yield curve inversion, all of that. Yield curve has been inverted since last summer and we're in the exact same spot we were since May. So again, that's my 2 cents on it. Everything that he already said, I mean, we already know in a sense from at least yesterday. So now we're just going to play technicals. We know our support level of 39.75. If we start breaking above 40.13, then we'll go ahead and see if we have some juice to the upside, maybe retest 40.60. And if we do, we can short it again ahead of NFP and play that way. So again, I think that the price action in the technical trading is probably our best bet moving forward, since that's really been the only thing we can hang our hat on. Let's say, good morning, Carlos. Are those levels in Instagram posted still in play? Again, we've just been chopping around on Amazon. Let me make sure and I can find exactly the level because I didn't have those. Give me a second, excuse me. Let me make sure that I have that exact setup here. You're talking about the range of, let's see, no, that's the wrong one. Where's the Amazon trade? Or the Amazon setup, excuse me. Calls above 97, puts below 90. We really didn't get below 90. So again, that's still in play. I have 89.94. That's that. But in terms of above 97, you could see it. 97.24, so pretty similar. Shout out to Anthony for making it easy and not making it difficult for everybody, just doing round numbers. But yes, we've been stuck in a range on Amazon, so really this is the exact same levels I have, and again, just make it round if anything, but no real edge on Amazon. I closed my SQQQ call yesterday for 80% profit. We have runners for today. Hope for Powell. Nice, nice. I have learned when everyone thinks we're going one side, the market does the opposite. I mean, yeah, you can kind of think of it that way, true. If that's the case, then we're really going to soar because equity allocation based on the American Association of Institutional Investors is literally at its lowest point ever for in terms of equity allocation. Like no one's buying stocks in terms of the survey, yet we're at the same place in May. So someone's lying. I don't know who, but I mean, we're in the same place as then. So regardless of the data, it's just the exact same stuff where we are. Do you think the market will be as volatile as yesterday? The only thing that would make it volatile, in my opinion, is if Powell reiterates that we are going, and he has to say this, in my opinion, we're going to go 50 basis points. He has to really say that. If he starts saying that we're not sure, 25 basis points is still in play, then the markets will probably go higher. But in terms of volatility, again, the dollar is right at the 100-day moving average. Again, if we go a little higher, we'll probably hit the 200. But it looks to be resistance, at least for now, depending. But the bond market, in terms of what we're looking for, yields are coming down. So we'll see what happens. But look at the 10-year yield right now. 38.80 is my support level. There's a gap to fill right around 40.85 or 40.80. And really since last Tuesday, we've been pretty much flat with a little deviation on the top here at around 4.1. But I mean, the bond market really, at least in the long curve, has been pretty stable. It's the short end, again, the 2-year, the 6-month, the 1-year T-bills. Those have been volatile, which has been moving the stock market. Again, the problem is if bond yields go higher, why would you want to buy stocks when they're volatile and they actually pay less of a dividend yield or an actual yield than the safest instrument on planet Earth, Treasury bonds? So again, the higher rates go, it makes stocks less appealing. We're not in the environment anymore. There is no alternative. There is an alternative. Bonds, fixed income, cash. Those are alternatives to the stock market. And that's kind of what we're fighting in terms of forces. Again, would you want to invest in Coca-Cola right now, paying at 26 times price to earnings with a 2.4% yield? Or you can just dump it in a 2-year treasury yield, a bond, excuse me, paying 4.7, 4.8%. That's the problem. So again, we need rates to go down. But again, if you have a hawkish Fed saying that rates are going to continue to go higher, we're going to continue to tighten, there's no real point to buy bonds here at these levels. You want to go ahead and buy them when they're at higher interest rates. Powell is at 10 a.m. today, yes, in front of the House. You think he'll be on CNBC or Bloomberg. I'm watching CNBC right now, so I'll be ready to watch it at 10 a.m. So that's where we are this morning, kind of in a crossroads, kind of. We'll see if we retest. We'll see if we get a snapback rally, but kind of tough to call. I have 39.75 for support. That's the retest of Friday's breakout. And then we have 40.14 for continued upside for S&P futures. And then we could start taking a look at some trades to look at. But one more trade for the road. Let's go and take a look at Tesla. Tesla here. Let me go and bring up the daily. It is trading at 184.94. So let's call it $2 down from where it was on the close. If we break here, you can see this kind of straight up range that we've had. Kind of a little setup here. Kind of a nice little channel between 220 and around 183.88. If we break down, then you also have 177. Maybe you could play the 170 puts. Might be too close for comfort. But keep in mind, there is a gap to fill on Tesla from their earnings, 146.25. So if we start breaking down a little bit, maybe we get it below 177. If there is some weakness on Tesla, you better believe you have that gap to fill right there. And a lot of traders will be watching that as we move forward. And you're very welcome. And congratulations on your SQQ trade. Love it, love it. We'll go and leave it there, guys. I'll catch you guys in the blog. Have a great rest of your morning. Make it a great trading day on a Wednesday. We'll see you tomorrow for the morning note. Cheers.